Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Spot gold prices climbed to about $4,000 an ounce for the first time ever as concerns over the U.S. economy and a government shutdown add fresh momentum to a scorching rally. More money. Bloomberg has learned Elon Musk's XAI is raising more financing than planned, tapping backers including Nvidia to lift its ongoing funding round to $20 billion. And in what is seen as a final push, senior officials from the U.S., Qatar, Israel, and other nations head to Egypt for talks aimed at ending the two-year war that devastated Gaza and destabilized much of the Middle East. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. I'm going to start off the show telling you something that I've not said for at least 7 days, which is that we actually saw U.S. Wall Street indices end in the red yesterday. So the end of that 7-day winning streak, that namely on back of perhaps some stabilization in those AI names. Oracle, one of the stocks that people are watching out for yesterday, some disappointment coming through on their margins in their cloud business. So by the end of the session, Oracle was down 2.5%, pulling down some of those Mag 7 names. And what we saw was a weaker close, actually, for Wall Street. And that's also transpiring into the Asian session. Today, futures stabilizing up about 15 basis points. 10-year yields also sitting at around 4.12. So we rallied back a couple of basis points yesterday, but still keeping a close eye on what's been happening with global fixed income markets. JGB yields doing quite well this morning, so reversing some of the recent weakness post the LDP leadership contest because of a stronger auction there. So that's sort of transpiring as well today with U.S. Treasuries. So money going back into fixed income. Euro, I would say in focus somewhat, down 0.3%. Of course, keeping a close eye on developments in France, the political situation there. The fact that time is running out for Le Cornu and even for President Macron himself to figure out next steps on how they're going to get a budget together and indeed how you can cobble together a functioning cabinet. So that all of that is happening in the background. But Euro not really reacting so much to it. But what I would say is it has been a better week the last week for the USD. That is having that is why you're seeing Euro come down a little bit this morning. We'll speak more about that with our guest in a short while. And then gold. Take a look at gold. We're through $4,000 for the first time ever in history, up 0.9%. The rally just continues and continues. We have loads of senior voices from the world of finance, including Ken Griffin's Ray Dalio, all of them speaking to us over the last couple of days and talking about the rally and the fact that money has gone in, namely because there has been a portfolio reallocation away from the USD. So again, a topic we're going to talk about on the show. Flipping over, though, I also want to show you one other chart that sort of went underneath my radar, and I was speaking about it with our colleague Anthony Stevens over in Hong Kong. But really interesting to note just how much of a run-up we see, not just in gold, but also in other metals as well. Copper really benefiting too. If you look at the price performance, the price action of copper over the last year, we're very close to the one-year highs. Also benefiting from this massive push into data centers and the build out of data centers and the grid around the power infrastructure. And take a look at the massive outperformance that we're seeing in some of these metals ETFs, even versus the S&P. And, you know, forget about oil. Obviously, oil hasn't done a lot over the past year, but even massively outperforming the S&P, which has had a strong year. So that is the performance of metals. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min, a lot is going on there, but maybe just walk us through the handover as we talk about some of this AI euphoria stabilizing in these U.S. markets.
That's right. As you said, a weak handover from Wall Street, Asian benchmark on the back foot today. And you can see mostly in the red here. As you said, the Oracle story, right? The thin margins on its cloud services, really disappointing investors and putting a pause on that AI rally. And so you can see the TAIEX is being dragged down by TSMC, a big catch down for the Hang Seng as it reopens after the holiday. The Nikkei is fairly flat at the moment. We don't often put up Vietnam, but it's here today because it got an upgrade from FTSE Russell to emerging market status, and that potentially would unlock billions of dollars into the Vietnamese stock market. It's trading slightly higher today. But flip the board, we're taking a look at the Chinese tech stocks after markets reopen in Hong Kong. And you can see, again, big slide down some of these tech names like Alibaba and Baidu, SMIC as well, down about 1%. But Alibaba in particular, I want to highlight that because Deutsche Bank yesterday yesterday just raised the price target for that company by 28%, saying that they have become this full-stack AI services provider, and yet we still see this big decline here of about 3%, and a warning from our own Bloomberg intelligence analyst Robert Lee saying that markets are overestimating the intelligence of AI, that companies like Baidu, like Alibaba, they're going to struggle to deliver meaningful earnings upside given the stronger valuations and the market expectations, and that could cause them to reevaluate the capex spending. But flip the board, we're also taking a look at the yen as well, because we continue to see a fifth day of declines here, and the selling pressure is still there. Certainly, perhaps not enough for the BOJ to intervene yet, but we already have the Finance Minister Kato talking about keeping an eye on excessive moves in FX, and the pressure is going to be felt in the JGBs, because you can see here the selling off in JGB futures, and certainly something to keep an eye on. There are speculation that maybe the yen carry trade would be making a comeback.
Oh, okay. Thank you for the overview there. Everything from AI to JPY, minimum low in Hong Kong. Well, spot gold has broken through $4,000 an ounce for the first time as concerns over the U.S. economy and a government shutdown add fresh momentum to a scorching rally. Wall Street titans now saying the metal has become a safer haven than the U.S. dollar.
Dollar's depreciated by about 10% in the first half of this year. It's the single biggest decline in the U.S. dollar in 6 months in 50 years. Gold is at record highs. Sovereigns around the world, as you see central banks around the world, as you see individual investors around the world go, you know what? I now view gold as a safe harbor asset in a way that the dollar used to be viewed.
Gold is a very excellent diversifier of the portfolio. So if you were to look at, just from the strategic asset allocation mix perspective, you would probably have something like, as the optimal mix, something like 15% of your portfolio in gold, because of the fact that if you didn't even have a tactical, because it is the one asset that does very well when the typical parts of your portfolio go down.
Well, so much to discuss this morning, from gold to currencies. Joining us now is HSBC Global Head of FX Research, Paul Mackel. So listening to some of the titans of the industry there, Ken Griffin from Citadel saying that he believes gold is a safer harbor than the USD these days. Ray Dalio recommending that gold should make up about 15% of investment portfolios as a diversifier. Are you seeing that from your account base? Are you seeing an intentional portfolio reallocation away from the USD into gold?
Well, I will say, having been in the region for the last few days, it's coming up in every client meeting. It is the topic of discussion. Of course, the higher the price goes, the more that people seem to get interested. But I think what's happening here is there's a few forces at play. I mean, one, it's been pretty well telegraphed that central banks have been diversifying into gold. Clearly, the retail community is getting quite excited. So I don't think it's just about the U.S. dollar, though, so it makes it a little bit different from what's been said or highlighted by others. But I think it's a question mark about fiat currencies altogether. You know, we have uncertainty in Japan, we have uncertainty in other places, so it's not just about the dollar that's being questioned at this point that's helping gold.
But, you say that, questioning about fiat currencies, but in the example of euro, and I mentioned it at the top of the show, you do have political questions going on and swirling around France, but the currency as a whole, the currency for the Eurozone, has remained rather immune to those perhaps very country-specific developments. How long can that paradigm continue for?
Well, you see moments where it can have an impact, but as you say, it's one story within many countries within the region, so it doesn't have a lasting impact, and that's something that we need to bear in mind. I also think that we still have quite big dollar forces that are going against that currency. So we can get interested or excited, that is, in the currency market about what's happening within Europe. But ultimately, the big trend is still that the dollar depreciation story is not over.
Okay, so then you're thinking about euro from the context of what happens with the USD. So actually, let's address that. I was really surprised to see the dollar gain ground over the course of the last week. There's a U.S. shutdown going on. Who's buying the USD here?
Well, I think a couple of things. That one is just a bit of a rethink that we've been so accustomed to look at policy uncertainty in the U.S. as being bad for the dollar. And then we've had a reminder that there can be policy uncertainty elsewhere. And as a result, that's kind of recalibrated the market expectations, how to think about the dollar across the board. But ultimately, I still think that that's going to be a short-term type of influence. Who's buying it? I would imagine it's more of your speculative type of forces that are participating in this. I think it really started with events in Japan.
Yeah.
And it's cascading into other things for the moment. But look, let's not lose sight of probably, as I said, the biggest driver in the room is that the Fed is still in the easing cycle. And when that happens, the dollar tends to soften.
Okay, but then the Fed has to deliver on what is priced into the curve, right? So 4 or 5 rate cuts by the end of 2026. That may not happen if you get upside surprises in inflation, in which case it's difficult to argue that the dollar will continue falling if those rate cuts don't actually get realized.
Well, that's a great question. And the way I would answer it is that it tells me, and has been telling us for quite some time, we're probably in the final innings in terms of how much the dollar will likely weaken.
Right.
And once it becomes clear that the Fed easing cycle could be finished at some point next year, or the early part of next year, which is very much our thinking, then we could have the components in place that the dollar has bottomed. And we've been highlighting this since early July, that the bottoming of the dollar could be closer than what many people could be thinking.
Yeah, so it's down 10% year to date. How much further do you think we can go?
I think we've got a few percent left in this trade.
Okay.
It's come a long way. There was a big flop in the dollar. Now we're going through the chop in the dollar because it's bumping around versus many major currencies. But once we get some clarity, and that perhaps when the shutdown is over and we begin to see the data coming through, and it's validating why the Fed needs to do a bit more easing, as I said, it weighs on the currency.
So flop, chop, maybe at some point pop.
We'll use that.
You can use that, exactly. I do want to ask you something that I've been reading about as well, which is, if this shutdown does continue for longer, it obviously just means we have less data to look at, right? Especially that non-farm payrolls print that didn't come out last week. So in the absence of data, is that also not eventually going to impact the Fed? I mean, if the data is not being published, they may also have to postpone their rate cuts as well. So don't we also have to think about that they may have to keep rates where they are in the absence of data being printed?
Well, the short answer is no. We think they'll probably stay the course and deliver another cut at the next meeting. But like everyone else right now, I assume that they're looking at alternative data sources to try and back out the pulse of the economy. There's a number of high-frequency indicators out there. Obviously, the survey data can still matter, and there are some employment indications as well. So I don't think there's enough to say that there's massive blind spots and they won't keep cutting.
Yeah.
But they're probably mindful of these blind spots.
Okay, so let's talk about one currency that actually has been not performing well versus the USD. That is the yen. We've massively shut up in the last couple of days after the LDP leadership contest. I mean, do you think there is too much baked in at this point about what the new LDP leader can deliver in terms of fiscal stimulus and sort of putting pressure on the Bank of Japan to keep monetary policy easy?
Well, what stood out to me was just the thinking or the comments about trying to control cost-push inflation. And part of that inflationary story has been a function of a weak yen. So I think there is some understanding there that, unlike previous thinking about having very loose monetary policy or very loose fiscal policy, you can't necessarily do that given where the yen sits at this point. You could be creating an even bigger problem. So I think, again, the market is perhaps getting to a point of overreacting to things.
Yeah.
Let's see how the policy framework develops within the next few weeks. And if I'm right, then bring back some stability in the Japanese yen and poised into strengthening into the hike.
At what level do you think we may be close to intervention territory in the yen?
Wow, geez, I think it'd be interesting comment-wise. We're getting up to pretty high levels here. It's always hard to gauge exactly where the pain point is, but I think from a short-term basis, people would start to get quite nervous if we're up at 155.
Okay. Paul, thank you so much. Really good to have you in the studio as well. It's nice to have you here in the studio, not on a Zoom. Paul Mackel, HSBC Global Head of FX Research. Now for a look at some of the other stories you're following today. President Trump is threatening to block back pay for some federal workers once the government reopens, saying some don't deserve to be taken care of. The White House Budget Office has drafted a memo arguing the 2019 law guaranteeing back pay is flawed and doesn't require automatic payment. Democrats call that interpretation an outrage and a clear violation of the law. Emmanuel Macron's rivals are turning up the heat on the French president and demanding their choice of prime minister, snap elections, and even his resignation. Macron was thrust into fresh upheaval on Sunday after Prime Minister Sébastien Lecornu resigned just hours after unveiling a new cabinet. Options are limited for Macron, but so far he's ruled out another early vote. Coming up, teams from the U.S., Qatar, Israel, and Turkey are set to join the Hamas talks currently underway in Egypt and what is seen as the final push to end the war in Gaza. We are live in Jerusalem next. This is Bloomberg. Teams from the U.S., Qatar, Israel, and other nations are heading to Egypt as part of a final push to end the war in Gaza. A U.S. team, including Special Envoy Steve Witkoff and Trump's son-in-law Jared Kushner, is set to join Qatar's Prime Minister and other senior officials in Sharm el-Sheikh. Hamas says it's looking to secure what it describes as a fair hostage exchange as part of a deal. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Well, Dan, so many of these discussions, all of the discussions are happening behind closed doors. We don't have a lot of information in terms of where they are in the process. But perhaps the fact that some of these high-ranked officials, senior representatives from the Arab world and the U.S. are flying into Sharm el-Sheikh is a positive sign?
I think you're right. This is the third day of those talks. You have the principal negotiators and mediators converging on that Red Sea resort. These are busy men. They have other things to keep themselves busy. They also have at stake the credibility of their countries and the governments they represent. So one assumes they would not be coming out if they did not feel that these talks were going in the right direction. The right direction meaning an implementation of that Trump plan unveiled last week, a plan for ending this two-year-old war and, as he would put it, bringing peace to the Middle East. Very ambitious. Indeed, there's been little disclosure from any of the parties, with the exception of Hamas, perhaps not surprisingly, because the full Hamas delegation has been in Sharm since the outset. The comments have been a bit cryptic. One is a Hamas demand to have a guarantee, as we would call it, that Israel would end the war as part of this deal. Hard to understand that, given that the text of the Trump plan speaks about a de facto and declared end of the war the moment the first phase is undertaken, that being the freeing by Hamas of those 48 remaining hostages in Gaza. So it would appear that Hamas may be angling for a speedier withdrawal of Israeli forces from Gaza than that envisaged by the plan. The other issue is, as you noted, Hamas talking about a fair hostage exchange. This, I think, points to what Hamas would want, the people it would want to be on that roster of 1,950 Palestinian prisoners and detainees to go free as part of the Trump plan in exchange for those hostages, though not necessarily right away. Israel is almost certain to balk at some names that Hamas might put on that list, specifically masterminds of suicide bombings by Hamas going back decades. So those could prove to be thorny issues. I imagine during the course of the day, as those principals come into Sharm, we'll know more.
Yeah, so essentially the mechanism for the right field conditions, which is what Hamas were looking for, the withdrawal line, in addition to what names are going to be on the prisoner list. Bloomberg's Dan Williams in Jerusalem, thank you for spelling it out for us. Okay. Now, coming up, deadly clashes in Aleppo between the Syrian army and the U.S.-backed Syrian Democratic Forces. We'll bring you the details next. This is Bloomberg. A tentative ceasefire has been reached in Kurdish-majority neighborhoods of the northern Syrian city of Aleppo. That's after fighting broke out between the Syrian army and the U.S.-backed Syrian Democratic Forces, and a setback for the new government's efforts to unify the country. Let's get more with our managing editor for Middle East and Africa, Paul Wallace. This has been a really tricky situation, especially with those Kurdish forces up in the northern part of the country. But I believe earlier this year, wasn't an agreement reached between Ahmed Shara, the interim president, and the Kurdish forces leader to somehow integrate those Kurdish forces into the state institutions? Apparently, there was an agreement, but then, of course, we saw the fighting break out and quite violent clashes the last couple of days.
Exactly. That agreement was seen as a bit of a turning point. It came about several months ago, but since then there's been virtually nothing in the way of execution on it. Very little in terms of the FDF, the Syrian Democratic Forces, this powerful Kurdish militia, actually being integrated into the Syrian National Army. And the clashes in the last 2 days show the sectarian tensions that still exist in the country. But often these tensions and these clashes between various groups in Syria are feeding on themselves. So we had, it was back in the summer, very violent clashes between Druze and Bedouin tribesmen and Syrian security forces in Suwaida, a province near Israel. There's a lot of thinking that the SDF and sort of Kurdish forces or Kurdish political groups in Syria see those clashes and think, why would we essentially give up our autonomy when it comes to military power and integrate into the Syrian National Army when these things are happening? Because the Syrian National Army is being blamed often for, if not starting these clashes, then exacerbating them.
Okay, so still a knife's edge when it comes to some of these sectarian violence situations that are popping up. And of course, this comes on the heels of the first elections in Syria since the fall of Bashar al-Assad this past weekend.
Yes, sort of parliamentary elections, if you like. But there's, a lot of people say this is not really a proper democratic exercise. This is not exactly a display of sort of universal suffrage or anything. The electorate was very sort of tightly controlled. The candidates were effectively chosen by the government. So some people are saying, look, it's a first step. This is a country that's been in civil war since 2011, effectively. It's been absolutely devastated. It wasn't a democracy even before then under the Assad family. So it's got to take baby steps. But I don't think in and of themselves these elections, which seems to pass smoothly, there weren't any reports of sort of violence and things. But I don't think in and of themselves that people are saying they're going to make much
Well,
difference.
yeah, I mean, a third of the parliamentarians were directly appointed by the president and the other two-thirds indirectly. So not fully democratic, but at least elections and a step in the right direction. Paul Wallace, thank you so much. That was Paul Wallace, the managing editor for the Middle East region. Let's take a look at equity futures as we head into the European session. Things are looking up. We had a bit of a pullback yesterday for Wall Street indices, but today things are stabilizing. AI very much in focus as some of the hype around that sector begins to subside, marginally so though, given how big a run-up we've had in the last few months. All right, we will talk more about that AI boom, which has fueled massive gains for big tech. But that rally may be running out of steam. We're going to be talking about that with our next guest, Mike Coop from Morningstar Investment Management. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Spot gold prices climbed to above $4,000 an ounce for the first time ever as concerns over the U.S. economy and a government shutdown add fresh momentum to a scorching rally. More money. Bloomberg has learned Elon Musk's XAI is raising more financing than planned, tapping backers including Nvidia to lift its ongoing funding round to $20 billion. And in what is seen as a final push, senior officials from the U.S., Qatar, Israel, and other nations head to Egypt for talks aimed at ending the 2-year war that has devastated Gaza and destabilized much of the Middle East. It's just gone 8:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. We have got U.S. futures trading slightly towards the green today, up 15 basis points, though a pullback for those Wall Street benchmarks. Oracle, one of the names in focus yesterday at the stock, ending down 2.5%. Some concerns around their margins in their cloud business, and that sort of set the tone for other names within the AI space as well, and also has transpired in the Asian session. So a bit of a stabilization or consolidation going on around those AI stocks, which really have done so well the past couple of weeks. 10-year yield sitting at 4.13, so fairly stable today. We're down about 2 basis points throughout the course of the last 24 hours. The euro also in focus, sliding a little bit versus the USD, which has gained ground throughout the course of the shutdown. We were speaking about that earlier on in the show. Now down about 0.3%. The euro is, again, keeping a close eye on developments in France with the pressure mounting on President Macron either to bring in a new prime minister or to hold legislative elections. So something to watch out for there, of course. And then gold, big theme this morning, up 0.9% through $4,000 for the first time in history. Again, the run-up in gold has been nothing short of spectacular. It's up more than 50% year to date. As we speak to some of the titans in the industry, the likes of Ray Dalio saying that 15% of a person's portfolio should be invested in gold. You've got Ken Griffin also saying that gold is, in his perspective, a safe harbor than the USD is. So really notable to remark what some of those key leaders in the industry have been saying. And then finally, I want to switch over and also just point out the massive run-up we've had, not just in gold, but also other metals as well, including copper. And this is an ETF that tracks metals, non-ferrous metals as well, and they've really massively had a climb in the last couple of weeks or so, in line with the run-up that we've seen around these AI stocks as well. And namely because when you think about data center build-out, you also need the metals to power the infrastructure and the grids. And that's one of the reasons why copper is trading as well, close to the highs it has seen over the past 12 months. So something to bear in mind. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min, walk us through the price action today.
Yes, Jumana, we're keeping an eye on the currency markets here because, as you said, we've been seeing that dollar strength. It's not just because of what's happening in France and Europe, but also what's happening with the yen. Today, we're seeing the yen falling to about the 152 levels, about 0.3% higher on dollar yen. This is the fifth day of the yen weakening over the win of the new LDP chief. And so that is... Also, again, our Bloomberg's M-Life strategist Mark Cranfield saying we need to see a few more days of outsized move before the BOJ is going to intervene in the currency markets. But until then, we're going to see the impact on the on the JGB markets. We're still seeing sell-off in the JGB futures, and there is speculation about whether or not the yen carry trade is going to make a comeback if this trend continues. But flip the board, another currency that is actually even weaker than the yen, believe it or not, is the Kiwi dollar. You can see it is falling against most major currencies, including the yen, about 1% weaker than the greenback today. That's after the RBNZ cut rates by about 50 basis points, an outsized cut, and also providing more dovish guidance, saying they're willing to cut rates even more if the economy doesn't catch up. And certainly this is the worst performing G10 currency so far over the past 12 months. But flip the board, we're also taking a look at the tech stocks in Asia because, as you said, we have been seeing this rally in the AI euphoria, taking a pause in the US after the Oracle story, the thinning margins when it comes to its cloud services data. And we are seeing here as well on Alibaba, Baidu, TSMC, a sea of red across these Asia tech stocks, certainly raising the question about whether or not this rally is overextended in Asia as well.
Min Min Lo in Hong Kong, thank you so much. JP Morgan CEO Jamie Dimon says the bank is spending $2 billion a year on AI and expects that to deliver billions more in cost savings.
Look, I think people shouldn't put their head in the sand. It is going to affect jobs. So think of every application, every service you do, where you'll be using AI. Some to enhance it. Some of it'll be you doing the same job. You're doing a better job at it. There will be jobs that it eliminates. But you're better off being way ahead of the curve and retraining people. So we retrain and redeploy a lot of people. So for JP Morgan, if we're successful, we'll have more jobs. But there'll probably be less jobs in certain functions.
Well, Dimon has been one of the most outspoken Wall Street voices on the opportunities AI offers. And while big banks and tech giants continue to pour billions into the technology, markets are showing signs that early winners may be losing their edge. Could the Magnificent Seven stocks be nearing peak outperformance as the AI trade widens? Well, for these existential questions and more, we're now joined by Mike Coop, EMEA CIO at Morningstar Investment Management. So AI, so much conversation these days is around AI. I thought it was interesting to hear from Jamie Dimon. He said AI cost savings now are matching the money spent. So they actually are sort of breaking even in terms of what they're investing and how much cost savings that is leading to. Is that representative of the industry as a whole, do you think?
Good morning. It's a really interesting anecdote. And as I look at our multi-asset managed portfolios that we run for clients, we ask ourselves the question, do we have enough diversification in portfolios when there's this interconnectivity that's increasing around the theme of AI? And there's one side of that connectivity, which is the providers, the infrastructure rollout, the big spenders, and all the deals we've seen. And then there's the other side, which is companies applying it to enhance their offering, to reduce their cost structure. The net of all of that is that at the wide economy level, we think it's going to be beneficial over time for both inflation and for productivity. So that's positive, and all of these instances of general breakthrough technologies like this in the past have been very good, interesting enough, for bonds because they're very disinflationary. What they do for equities is less clear because as the pace of change picks up, then it's harder to forecast who the winners will be on both sides. And as an investor, your challenge is to go, how confident can I be about predicting the future and what's the right price to pay?
And it also, so let's come back to, so I like that you make the distinction between, you know, the picks and the shovels and the infrastructure versus the application. Let's talk about the first bit. And the fact that so many of these companies seem to be investing in each other. So you have OpenAI doing deals with AMD, doing deals with Nvidia. You know, Nvidia this morning investing in XAI. So there's a bit of a circularity going on there. And there's a great big take actually on our terminal today talking about that. But is it possible to pick one winner when so of the ecosystem is intertwined with each other? It seems like they're all going to rise together or they're all going to fail together.
Well, it's true to say that things have become more connected. And as I think back in the last 40 years, I can think of a couple of examples where you saw something similar happen before. So in the late 90s, you have the interconnectedness of media, information technology, and telcos. And all of a sudden, things which previously marched the beat of their own drums started to move up and down together and became big parts of people's portfolios. And what it meant was that people had one big bet in their portfolio. So that's something which investors should be asking themselves today. We had a similar echo in the commodities markets in the mid to late 2000s, before the GFC, with how oil was being impacting agricultural commodities because of ethanol. So those parallels are presenting a pose for portfolio constructors as they think about this. It's nuts to think that you know who the winner will be in 3 years or 5 years' time, and just look back at Google emerging out of nowhere to be a dominant player. So I think people have to be a bit humble about their ability to forecast, which means you should think twice about paying a really high price.
Okay, but at the same time, if you're constructing an index, you will be underperforming, you know, versus the S&P if you're underweight the Magnificent Seven, namely because the Magnificent Seven account for about 40% of the S&P anyway. So how do you square that up with the incentive to also maximize returns?
Yeah, I mean, for our global multi-asset portfolios, then we're looking everywhere. We're using our 400 research analysts to look at opportunities all around the world. And it's really, you've got to do that now. You've got to foster and look broadly and deeply in markets. And when you do that, what we've found in the last few years is that there are many opportunities which we've identified in emerging markets, maybe about 2 or 3 years ago, that become more and more and more attractive. At the time, they're fairly contrarian calls. 2 years ago, China was a good example. Oh, it's uninvestable, and now everyone is flocking back to look at China again. So those are the opportunities. You need broad, deep research to find those opportunities. Some of those lie outside the US. But our research team, our Morningstar equity research team, analysis on small companies show there's good value in US smaller companies. And so as an investor, that's another part of the US market. Healthcare is another sector. So there are other places you can invest in.
Yeah, can I just ask you maybe a macro question about the US economy? Because we talked about the AI run-up. And when you look at the US today and you look at stock market performance, it's almost like there is a two-tier economy, a two-speed economy. You've got the AI economy, and then you've got Main Streets, where people are actually worried about layoffs. There's a shutdown going on. You know, these furloughed the people who've been furloughed may actually face the prospect of losing their jobs. There's an immigration crackdown going on as well. Do you worry that this bifurcation of the U.S. economy is actually going to lead to a more severe slowdown?
We do think that the effects of the increase in tariffs will start to show up more next year, both in terms of weaker growth and higher inflation. We don't think that's going to necessarily mean a recession or high inflation, but you'll start to see the impact flowing through more. I think the main take for investors is there's this increasing fog of uncertainty, which is coming from the way that things have changed in the trade generally and in defence and with AI. And this is why diversification really matters. You shouldn't be anchoring your portfolio on a macro forecast because there's too much uncertainty.
And what about diversification away from the USD? Are you doing that as well? Because it seems as though that's also become a common theme in the market.
Yeah, I think people have looked at their portfolios and seen the extent outside the US of how exposed they are to the US dollar along with their US assets. And they've moved to reduce some of that exposure through the currency hedging, through using gold as well. So that's happened. Our research suggests that actually the dollar, even after the move, is still pretty highly valued. And therefore, we don't see it as an attractive currency. We think emerging market currencies. And even though the yen has now been depreciated more through effectively speculation about the new Prime Minister's policies, that also stands out as potentially a good value-based diversifier in a crisis.
Okay, that's a good place to leave it. Mike, really good to have you on. Thanks for joining Horizons today. Mike Coop, Chief Investment Officer at EMEA for Morningstar Investment Management. Now for a look at some of the other stories we're following. Saudi Arabia's public investment fund has made its Eurobond debut, raising $1.9 billion across 2 tranches. The sale included 3- and 7-year notes and drew heavy demand. That underscores investor appetite for Saudi debt as the kingdom ramps up borrowing to fund Vision 2030 projects amid lower oil prices. ExxonMobil is considering re-entering Iraq after a 2-year hiatus. The oil giant is in talks to re-enter the country by signing agreements with Basra Oil Company and SOMO to explore the giant Majnoon field. The deal would pave the way for new export and marketing projects after Exxon exited its West Kurna 1 stake amid political instability. Coming up, show me the money. Elon Musk's XAI is tapping backers, including Nvidia, to lift its ongoing funding round by more than initially planned. Details on this Bloomberg scoop is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg has learned that Elon Musk's XAI startup is raising more financing than initially planned, including an equity investment from Nvidia. Sources say its ongoing funding round has now reached $20 billion. Asia Tech correspondent Annabelle Jewellers joins us now. So another day, another deal that this time Nvidia seems to be inking with XAI. What do we know? According to our own reporting, this obviously is the Bloomberg scoop.
Yeah, it's a Bloomberg scoop, and it's been very well read today as well. So it tells you there's a lot of interest. Again, to your point, we've just seen deal after deal after deal being struck in the AI infrastructure space in particular. But what we've got from sources here is that, so XAI, we knew they were looking to do some fundraising, but what we reported at the end of September was that they were looking at $10 billion at a $200 billion valuation. Now we've actually heard that they've upped the stakes to raise $20 billion instead. So you're talking about a doubling in the space of just a couple of weeks. And as you said, Nvidia, we're hearing, could be one of the ones that's getting involved here. Sources are telling us that they're looking to take an equity investment or make an equity investment worth as much as $2 billion. So, yes, it is a major capital raise for the company. And also raising that concern yet again, and it is the subject of our big take today, but essentially talking about how you're seeing sort of a circularity in a lot of these deals, because when Nvidia makes these investments, these companies are in turn buying Nvidia chips. So it's that question is this sort of leading into this AI bubble, or is the hype actually real?
I thought the structure of that deal was quite fascinating. We just had it up, and that they're investing in an SPV. The SPV is going to buy the GPU processors, but then those processors are actually going to be rented out to XAI. It's quite a complex structure, and really just speaks to the whole circularity of the whole ecosystem. You know, we have a big take about that up on the terminal today.
Yeah, that's right. So just to sort of recap again, that structure, it's the SPV. So out of that $20 billion, $7.5 billion we're hearing from sources is equity. The remainder is debt. The debt is going to be done through an SPV. It's the SPV that will buy the chips that we rented. That's how Wall Street investors essentially can recoup their investments on it. So an interesting structure, but as you said, yes, it is the subject of the big take today because out of these deals, as I said, you've seen Nvidia agreeing to invest up to $100 billion in OpenAI. You've seen this $2 billion deal into XAI. You've seen OpenAI inking deals with AMD. And what happens in these deals as well, as I said before, it's that question of Nvidia makes the investment. They're really the ones that are sort of bearing the brunt of this circularity argument, even though you see it applied to hyperscalers, for instance, as well. But Nvidia really dominates the ecosystem because of their control of these all-important AI chips. But what happens is they make these investments. These companies, in turn, then buy these Nvidia chips. So again, just going back to that broader thesis, are we seeing a major AI bubble forming, or are we actually going to see this genuine ROI being delivered as well?
Yeah, so really big questions. And thank you, because you have to help us make sense of all the deals that are going on, Val. Annabelle Jeweler is our tech correspondent out in Hong Kong. Well, coming up, Kenya has converted a large loan from China from U.S. dollars to Chinese yuan. We'll tell you why next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Kenya has lowered its benchmark rate for the 8th consecutive time. The central bank cut its key rate to 9.25%, which is the lowest level since 2023. Kenya's central bank governor, in a statement, said the move is aimed to stimulate lending by banks to the private sector and support the economic activity. South Africa's biggest union at Eskom is demanding a wage increase of up to 15% ahead of new negotiations. The wage demand is more than 4 times the inflation rate and follows Eskom's stabilization of the power grid and its first profit in 8 years. Eskom declined to comment on specific pay demands until negotiations officially start. And Kenya has converted its Chinese railway loans from dollars to yuan, citing annual debt servicing costs by $215 million and setting a potential precedent for other African nations. Kenya spends nearly $1 billion each year servicing debts to China, a growing strain on its public finances. For more, Bloomberg's Andiro Ganga joined us now. Andiro, so there's been a switch out of the USD into Chinese-denominated yuan. What's behind the move?
Good morning, Joanna. So if we go back a decade ago, Kenya borrowed $5 billion from China to develop the standard gauge railway all the way from the port of Mombasa, intended to connect Kenya to the border with Uganda. And a decade later, we are seeing that $3.5 billion of that loan is yet to be repaid. But like you mentioned in the intro, Kenya spends $1 billion annually servicing its debt to China. And almost half of the revenue that it raises goes into debt servicing in the larger picture. And so that is what necessitated this currency swap. And as a result, the country has bought itself some form of relief, $215 million annually. And it might not look like it's a lot of money, but this is a country that is in high risk of debt distress. And what this does is it opens up room for social spending, education, healthcare, and also development of infrastructure. And while the currency swap is happening, Kenya is also managing its Eurobond. It went back to the market. It raised $1.5 billion. Part of this money will go into buying back its $1 billion Eurobond maturing in 2028. And the rest goes into plugging that 4.7% budget deficit that the country will be looking at. And what the goal here is smooth repayment schedules and also ease refinancing pressures. Because if you look at the next decade, $26 billion in terms of external loans will be maturing, $1.5 billion in annual interest rates. So they need to create some form of flexibility for themselves. If we look at this conclusively, they're just trying to reduce the cost of servicing debt, diversify the currencies that they're exposed to, all while maintaining liquidity.
Yeah, but isn't it just moving from one hand to the other? So, you know, this reprofiling of debt can provide some short-term relief, but in the long term, does it really change things?
You put it correctly. In the short term, it provides relief, but in the long term, there are deep-seated structural issues that Kenya needs to look at. Revenue is lagging, pending bills are rising every single day, and then they have statutory obligations like pensions that really remain high. So this is a country that has a lot of work to do in terms of recalibrating its long-term fiscal strategy, but in the short term, it buys them the breathing room that they need. And this is also not in the context of just Kenya, but the greater African continent. The World Bank estimates that half of the countries are at risk of high debt distress, and so they could borrow a leaf from Kenya and start managing their debt, particularly with their bilateral lenders, to ensure that they have some fiscal room to try and look at things in the short term while they work towards long-term reforms.
Bloomberg's Andira Ganga in Kigali, Rwanda. Thank you so much for bringing us that story. Okay, pivoting back to markets again. The question for investors today is, are we beginning to see some stabilization or some of the hype around the AI euphoria bursting? Oracle was a big sign yesterday. That stock ended in the red after not meeting expectations on profits in its cloud business. That sort of set the tone for other AI stocks around the world. Today, though, things are looking up. S&P up 13 basis points. European markets trading flat. But that is it for Horizons Middle East and Africa. I'm Jemana Versace in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.